Well, let's switch gears here. Jefferies maintaining bullish on Target's reinnovation plans. Jefferies raising its price target on the stock to $205 from $195 as the healthy but cautious consumer is still spending. Let's bring in the analyst behind that call, good friend of the show, Tarlowe, who's the Senior Vice President of Equity Research over at Jefferies. Corey, good to see you here. Thanks for kicking off the second quarter with us. First, you got to take us into your thesis. What are you seeing at Target right now that gives you this optimism?
Morning, and thanks so much for having me. So I think the most important thing to note here is that perhaps the tone around the health of the consumer in the U.S. is changing. So I think for a good period of time, the narrative was the consumer's stretched, credit card balances are now over $1 trillion. She's prioritizing what she needs over what she wants. But now I think what we're starting to see is with the moderation in inflation, maybe there's some normalization of mix now in the consumer's basket. So if she's going into a store with $100 and now things like fresh fish, dairy, milk, eggs, et cetera, some fruits and vegetables are lower in price, maybe that's freeing up some incremental dollars to buy general merchandise. And so what we're starting to see now is an improvement in general merchandise in Target's business, and I think perhaps an improvement around tone for the broader consumer generally. So I think that these are some pretty bullish signs for Target and for the U.S. consumer.
Well, you mentioned freeing up some cash here. What about for unit expansion, investing in the store, in new locations? How do you see that playing out, and what's the strategy here?
Sure. So Target has about 2,000 units today, and they're growing. So the company is going to be adding over the next 10 years an aggregate of 300 new units. A lot of them are going to be in this newer format. They're going to have integrations with beauty, partnerships with Apple, Disney, Levi's, et cetera, to create excitement for the consumer. They'll have availability for Starbucks, same day pickup. So all of these things are likely to help to continue to drive traffic to Target stores, which should mean more customers, more benefits, greater sales, and even perhaps better margin too, as people maybe go to the store and pick up Starbucks and then they add in some incremental apparel items, which by the way are higher margin. So I think all of this bodes very well from a unit expansion standpoint, which tends to help drive sales. And one of the things that's really important to key in on here is retailers that are expanding units tend to also hold higher multiples as well. So it could be good for valuation ahead.
Corey, you met with management from Target as well as Walmart. I mean, take us into the tone from both of these executive teams and what you're hearing from them right now.
Sure. So the tone overall is positive. I think starting grounding in my comments on the consumer being relatively healthier and more resilient than I think we had initially expected. But for Walmart, one thing I think that was particularly interesting was that as I mentioned, inflation's been moderating, but particularly for food inflation has been moderating, and private label, which is a $100 billion plus business for Walmart, is also deflationary. And specifically within private label, food and consumables, private label is now running deflationary as well. So I think that this does bode really well for Walmart's private label business generally, because it means that perhaps Walmart's going to be gaining more market share. All the while, you're seeing more promotions or rollbacks on things like food and consumables, and these are vendor funded. So rollbacks were up, I think, 50% in the fourth quarter, and these promotions are becoming more broad versus item specific. So I think that again really does bode well for share gains for Walmart ahead.
Corey, we got time for one more here. Just in your broad coverage universe, any trends that you're seeing here that we didn't have a chance to talk about here today in the retail market?
Sure. One thing I think that's really important to key in on, it's not something a lot of people focus on, is the integration of AI in retail as we look ahead. Something that both Target and Walmart touched on. Walmart's continuing to leverage it on their AI search capabilities as well as in their supply chain. And they also mentioned that they're using it as a way to help associates or develop associates to incorporate schedule updates into their days and add trainings. This is important because Walmart's going to be adding $130 billion in sales over the next 5 years on a relatively flat headcount. So developing their associates, leveraging technology through AI and automation is going to be really key, not only to the Walmart story, but Target as well, as they continue to enhance their technology offerings more broadly. So this is something that we're going to keep following and paying attention to, but it's going to be, I think, a really key underpinning of more profitable growth ahead for retailers.
What's the biggest delta in the consumer experience as a result of AI, artificial intelligence, that shoppers can expect?
I think it has to do with faster service and more personalized recommendations. So if you load up a Target or Walmart app, it's about curating specific results for you that are relevant to you as the consumer. And that in turn could help drive higher sales, higher conversion, and greater efficiency for these retailers. It also helps to get goods to you more effectively. It could help with customer service and technology to integrate any sorts of complaints or thoughts around experiences, what people want refunds, et cetera. So leveraging this technology is going to be really critical to driving more profitable growth ahead. And again, it makes us really bullish on the prospects for Walmart and Target, who are relatively early adopters of AI and are using it more expansively across their business than other retailers at present.
Corey, you had me at AI. Thanks for joining us here. Corey Tarlowe, Senior Vice President of Equity Research at Jefferies.